Palantir is actually going better today. Price is slowly recovering. But here's the crazy part. Elon Musk must have revealed something. And this might push Palantir to a trillion-dollar company. People are speculating. Is the Doge deal real? Is it coming soon? Or is it just pure hype? Well, let me explain. Disclaimer. Today might just be the day we've all been waiting for. Palantir is finally making a move in the right direction. After yesterday's slight dip, the stock has not only recovered, but pushed even higher. It may not be a massive breakout just yet, but for the Palantir community, this is a strong signal that momentum is shifting. Given all the uncertainty in the market lately, this small but steady climb is exactly what investors needed to see. Zooming out to the past week, Palantir has been quietly fighting its way back, chipping away at previous losses. The recovery isn't complete, but the downtrend is slowing, and confidence is returning. Investors who have been holding on through the rough patches are finally seeing signs of life, and the fear of another major drop is fading. With this kind of movement, it's starting to feel like Palantir is setting up for something bigger. Now, here's the thing. While the excitement is real, one analyst is waving a caution flag. They're pointing to the charts and saying Palantir's move has been parabolic. The valuation is getting stretched, and insiders might be cashing out. Sounds dramatic, right? But here's the flip side. Big moves always come with skepticism. When a stock starts heating up, some will always say it's gone too far, too fast. The truth? Strong momentum attracts attention. And when a company is making waves like Palantir, there will always be those who second-guess the climb. As for insiders selling, that happens all the time, even in the strongest companies. It doesn't mean they don't believe in the long-term vision. Stocks don't move in a straight line, and after a strong push, some bumps along the way are normal. What matters is the bigger picture. Palantir is showing real strength, and investors are paying attention. If anything, all this chatter just proves that something big is brewing. But before we go any further, there's something you might want to hear. Remember when we speculated that Palantir could land a Doge-related deal with Elon Musk? Well, today an analyst pointed out something that could make that theory a whole lot more interesting. And if this turns out to be true, it could be absolutely massive. I'll break it all down later in the video. But first, let's talk about what Elon Musk is up to today. Palantir's co-founder Joe Lonsdale just called out a recent court ruling that's making waves. He didn't hold back, saying it completely missed the mark, and that the whole situation is packed with fraud and waste, something Palantir has been working to expose for a long time. But here's where it gets even better. Lonsdale openly said he's in touch with Elon. Not only that, but a lot of his friends are involved with Doge, and they're all working aggressively to fix some pretty crazy problems. He even admitted that while they won't get everything perfect, the work they're doing is important and needs to happen. Now think about what that means for Palantir. If they're already helping uncover major fraud in big institutions, imagine what happens if they get even more involved with Elon's world. We know Musk likes companies that move fast, push boundaries, and actually get things done. If Palantir ends up playing a bigger role in whatever he's building, whether it's in finance, crypto, or something entirely new, that could be a game changer. And for Palantir's stock? Well, let's just say, if investors start connecting the dots, things could get very interesting. And here's the thing. Remember when we talked about Palantir teaming up with Samsung? Well, they're not stopping there. Today, another huge partnership just dropped, this time with Archer Aviation, a company building futuristic electric aircraft. Now, making these next-gen air taxis isn't just about sleek designs. It's a massive challenge with strict regulations, complex production, and advanced battery tech. That's where Palantir comes in. Archer is using Palantir's AI to streamline everything, from manufacturing to air traffic control, proving once again that Palantir's tech isn't just for defense and government contracts. It's becoming a must-have for cutting-edge industries. And here's why this matters for Palantir's stock. Aviation has been slow to innovate, dominated by the same players for ages. If Palantir is breaking into this space now, imagine what comes next. Airlines, airports, even the military. This isn't just another contract. It's another step toward Palantir cementing itself as a tech powerhouse. With every new deal, confidence grows. And if this momentum continues, Palantir's stock could be setting up for something much bigger. And here's the craziest part. Remember when we, along with pretty much everyone, speculated that Palantir might land a massive deal with the Department of Government Efficiency, also known as Doge? Well, today, Alex Karp just dropped something that could change everything. Last week, Karp was asked if Doge would have any impact on Palantir. Now, he didn't give a direct answer, but the smirk on his face? That said it all. Instead of brushing it off, he actually doubled down, saying that Palantir will continue to benefit from Doge efforts because they create unmatched advantages for the Department of Defense. That's a huge deal. He could have played it safe, given a vague corporate response, or denied it outright. But instead, he let that reaction slip, and then confirmed that Doge is already driving serious value in government operations, a space that Palantir dominates. So, is this it? Is the Doge deal actually happening? Because if it is, we're looking at something way bigger than just another contract. Palantir has always thrived on government deals, but Doge isn't just any deal. This is about transforming how the government operates, cutting through inefficiency, optimizing decision-making with AI, and streamlining massive bureaucratic systems. If Palantir becomes the backbone of that transformation, it means deeper government integration, larger long-term contracts, and undeniable proof that its technology is essential. Now let's talk about what this means for Palantir's stock. When a company gets locked into a high-level government initiative like this, valuations don't just rise, they explode. Institutional investors take notice, confidence skyrockets, and suddenly the stock isn't just another tech play, it's a must-have. And if this deal brings in the kind of revenue many expect, the stock could easily go to levels that most people aren't even considering yet. And this is where things get really exciting. Every time a company like Palantir hits that kind of breakout moment, early investors see life-changing gains. We've seen it happen before. When a stock moves from speculation to undeniable success, millionaires are made. This is exactly the kind of setup that can turn long-term believers into serious winners. So while nothing is officially confirmed yet, Karp's reaction spoke volumes. If this deal is as big as it seems, we might be looking at the moment where Palantir truly goes to the next level. And those holding on now could be in for something massive. Now here's the craziest part. This just adds fuel to the fire of Wall Street's boldest prediction yet. Palantir hitting that trillion-dollar milestone. And get this, one analyst didn't just say it could happen. He actually laid out when. If Dan Ives is right, and Palantir reaches that level in the next few years, anyone who bought in when the stock was around that lower range could be looking at life-changing returns. We're talking about an investment multiplying so many times over that it turns early believers into serious winners. But here's the thing. This isn't just about a one-time surge. Palantir isn't a company with a short-term story. According to him, it's riding the AI revolution, a wave that's only getting bigger. If it keeps leading the charge in AI-driven decision-making, defense, and government efficiency, this could just be the beginning. And what happens when a company goes from billions to a trillion? The stock doesn't just go up. It reshapes portfolios, builds generational wealth, and creates stories of people who saw the vision early and held on. This is the kind of move that doesn't just change the value of a stock. It changes lives. Palantir's momentum is undeniable. If it keeps stacking deals, expanding its AI dominance, and proving itself as the backbone of next-gen tech, we might be watching one of the biggest growth stories of our time play out right in front of us. But what is your opinion on this? Comment down below. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, then turn on the notifications bell on this channel. Missing an important Palantir update might make you lose money. So, don't risk it. Also, please share this video with as many people as possible.
Something massive just happened. And Coinbase makes it even more interesting. This is the biggest amount that was seen this year. Billions sound like a joke now. Today we are talking about trillions with a T. But what is even happening? And why were we waiting 1 year for it? Well, let me explain. Disclaimer. Today, things took an unexpected turn. Analytics uncovered a jaw-dropping revelation in the crypto world. On-chain data nerds' watchful eye caught wind of some hefty transactions, totaling a mind-boggling 4 trillion Shiba Inu tokens. And the destination? None other than the major U.S. exchange Coinbase. This massive influx amounts to nearly $100 million in real-world currency. And wait, let's pause and soak that in for a moment. We're talking about a staggering sum here. To put it into perspective, Imagine a mountain of cash, tall enough to make skyscrapers look like pebbles. That's how colossal this move is in the realm of cryptocurrency. For starters, it's not every day that you see such astronomical amounts being shuffled around, especially in the Shiba Inu space. This influx could have significant implications for the market, potentially triggering waves of excitement, speculation, and maybe even a few sleepless nights for traders. But what exactly just happened? Well, according to a report, a whopping 4.29 trillion Shiba Inu tokens made their way to the largest US-based crypto trading platform. And what makes this even more intriguing is that these tokens were scattered among just 10 wallets. Talk about a concentrated effort. And here's where it gets interesting. Tokens were acquired over 2 distinct periods, spaced 3 years apart. The first batch was snagged back in September 2021, followed by another round in March of this year. And get this, the savvy owners managed to snag these trillions of coins at an average price of almost twice as cheaper than it is now. Fast forward to today. And if these holders decide to cash in at the current Shiba Inu price, they're looking at a cool profit of around $41 million. And now let's take a moment to digest that. Sure, it might not be one of those jaw-dropping, headline-grabbing gains that crypto is famous for. But hey, let's give credit where it's due. Turning a modest investment into tens of millions? That's not too shabby. It's like hitting a home run in the world of crypto. Maybe not a grand slam, but definitely a solid base hit. And remember that big Shiba Inu transaction we talked about on Monday? Yeah, the one where Robinhood moved a whopping 600 billion Shiba Inu tokens? Well, as it turned out, it was all just Robinhood moving its own stuff around. But today's Coinbase situation, that's a whole different story. We're in the dark about why all that Shiba Inu ended up there. And let me tell you, the rumor mill is working overtime. People are coming up with all sorts of theories about who's behind it and what it means for the market. It's like a mystery novel unfolding in real time, and everyone's trying to crack the case. But this is just the tip of the iceberg. If the $100 million Shiba Inu move is going to be a success, then it's going to be a success. But if the known 100 million Shiba Inu move got your attention, get ready for something even bigger. In a major shakeup in the crypto world, Coinbase just saw its largest Ethereum outflow of the entire year. And we're talking over $1 billion here. This massive shift, as reported by CryptoQuant, has set tongues wagging and sparked all sorts of debates about what it could mean for ETH and the market as a whole. So, while Shiba Inu is seeing some hefty inflows to Coinbase, Ethereum is experiencing some major outflows. It's like a seesaw of crypto activity, with one token going up while the other heads in the opposite direction. According to CryptoQuant's latest findings, a whopping 336,000 Ether were pulled out of the trading platform on June 12, amounting to around $1.17 billion. This isn't a one-off thing either. It's actually the 5th time this year that withdrawals from Coinbase have surpassed 150,000 Ether. And get this, the size of these transactions has been all over the map, ranging from $400 million to $1.2 billion. So, if you're in a situation where you're 1.1 billion, it's a clear sign that some heavy hitters are making moves in the market. Looking at the sheer size and frequency of these withdrawals, it's pretty clear they're not coming from your everyday Ethereum traders. Nope, these moves seem more like the work of whales or big institutional players flying under the radar. See, transactions of this magnitude are usually way out of the league of your average retail trader. They're more in line with what you'd expect from heavy hitters, with massive stakes and some serious market strategies up their sleeves. And now, as for why they're making such massive moves, well, that's where things get a bit fuzzy. We're all just speculating at this point. But if we look back at history and how the market tends to behave, we might glean some clues. Remember when Coinbase saw similar big-time withdrawals for Bitcoin before the launch of Bitcoin spot ETFs earlier this year? Well, some folks are thinking that maybe, just maybe, the current Ethereum exodus is a sign that people are gearing up for potential Ethereum spot ETFs down the line. But hey, it's all just educated guesswork. For now. And now, if these withdrawals aren't just the exchange shuffling things around internally, they could actually be a pretty good sign for Ethereum's future. Here's why. When you take a bunch of Ethereum out of circulation, especially in such massive amounts, you're basically creating scarcity. And in the world of economics, scarcity tends to drive prices up. It's like basic supply and demand stuff, you know? And that's especially important for Ethereum. And that's why Ethereum is so popular. And that's why Ethereum is so true in the wild and wacky world of crypto, where emotions and market sentiment can swing things pretty wildly. So while we can't say for sure what exactly this big Ethereum exodus will mean for the market right this second, most folks tend to see moves like this as a positive sign in the long run. After all, reducing the supply of Ethereum floating around, coupled with the potential introduction of new investment goodies like Ethereum spot ETFs, could be a recipe for some serious price hikes down the line. But hold on. Before we all get too hyped up about the Ethereum ETF hitting the markets, there's a crucial point we need to understand. A top industry exec is sounding a bit of a cautionary note here. See, they're saying that when it comes to spot Ether ETFs, we shouldn't expect the same huge influx of cash on day one, like we saw with Bitcoin ETFs. Here's the deal. Bitcoin's got this pretty straightforward use case as a store of value, which made it easier for investors to wrap their heads around. But Ethereum? Well, it's a bit more complicated. Its value is tied to all of the value of Ethereum. There's all sorts of tetchy stuff like smart contracts and decentralized apps, which can be trickier to put a price tag on. According to Stephen Richardson, who's a big shot in the financial world, there's still a lot of work to be done in figuring out how to properly measure Ethereum's worth. Without a clear consensus on that, we're probably not going to see the same frenzy of cash pouring into Ethereum ETFs like we did with Bitcoin once. But hey, here's the silver lining. Even though day one might not be as explosive, many folks believe that in the long run, the Ethereum ETF could be a major changer for the whole crypto scene.